I sat by my phone here in New York yesterday hoping Chairman Powell would call to learn how to log on to his Bloomberg in Chair Yellen's office. The call never came, Chairman. Michelle Steele, help me with that. We've got to get the chairman up to speed on how to use the Bloomberg. Does he care about market turmoil, and will this adjust Fed policy?
Well, I think in some sense the Fed is having a debate right now about whether or not the monetary policy adjustments they've been making have been getting through the markets in a way that actually reflects the change in monetary conditions. At the same time, anytime the market moves in a sharp way, you have to be concerned about how that spills over into funding, into credit markets, and the broader financial conditions. So my perspective would be, given what the economy is doing, a correction in the equity markets would not be unwelcome and would certainly not stop the Fed to move at the March meeting, which is what we expect. But if we start to see disruptions, if we start to see stress beginning to show up in the system, that starts to turn into a different situation.
Right. Dean, do you agree with that?
Yeah, Jerome Powell, welcome to the neighborhood. First day and the VIX goes to 40. I mean, really an interesting timing. I think in some ways, if this doesn't spiral into something even larger, it's a bit of a gift to the Fed. This was a long time coming. These VIX products have been an accident waiting to happen. And I do think, though, the Fed bears some responsibility for this in their excessive amount of communications to the markets. Tom mentioned Chairman Greenspan from a previous era, and he was always very secretive in some ways and forced the markets to figure out what was on the Fed's mind. The Fed's philosophy these days is to tell markets what the ending of the movie is well before the movie ends, and when you know what's going to happen, trades that lean against stability, i.e. selling volatility, earning carry generated income, these types of trades become more prominent, they become more crowded, and crowded trades get unwound in a hurry. So I do think in some ways, if this doesn't become a bigger thing, it's a good thing for the Fed because it probably prevents something even larger from happening down the road.